So I've got with me Adam Tavener, Chairman of the Clifton Group of Companies, with us today. We're going to be talking about the Coronavirus Business Interruption Loan Scheme. Adam, can you just give us a quick update on where we are? I know this is moving rapidly, but where is the scheme as we talk?
Yes, good morning. The scheme continues to gather pace, which is good. As of last week, the figures from UK Finance were that the total lending under the scheme had doubled in the previous 7 days and has now reached 2.8 billion. And that covers across 16,000 businesses that have now successfully applied to their lender for support under this scheme, which is goodish news, and I think it would be churlish to criticize that rate of increase, but of course it leaves a very, very great deal still to be done.
Okay, so I mean, demand is clearly sky high. I know from looking at the numbers, there's a bit of a disconnect between the kind of thing that we're hearing about the demand being in the, really dramatic numbers above 100,000 businesses looking for this type of finance, and the number of applications that the banks are talking about. Do you think that's just a different way of looking at the numbers?
I think we're dealing with some semantics here in terms of how we would interpret application and how a bank might interpret application. The 16,000 successful applicants come from a pool of 36,000 formal applications that UK Finance members have received. Now, on the face of it, that doesn't feel like such a bad success rate, but, and it is a big but, that number, that 36,000, are absolutely formal written applications under the scheme submitted to credit, not inquiries. And we know, as a matter of fact, that the vast majority of problems and applicants failing are actually failing at the inquiry stage. They're essentially being told not to bother to apply because they are deemed to be ineligible one way or another. We know that there are about 5.5 million small businesses across the UK. And we know that demand for this scheme is sky high. So 36,000 applications in the light of that sounds like a very small number indeed. So clearly there is a disconnect, and we believe that the majority of that missing cohort are simply being told not to bother to apply.
Right. So given we've got this, as you say, sky high demand, and I'd agree, I think that we can see that there are many, many more businesses who are in urgent need of funds than the 16,000 or 30,000 that have sort of popped their hands up. This is really a supply problem. We keep hearing noises around various tweaks that the Chancellor's making to the guarantee scheme. What do you think we can do to address that supply issue?
The clearest solution, or not solution, there will be no one solution, but there are a number of things that can happen. And we know, as a matter of fact, that the British Business Bank are working incredibly hard to broaden the supply base of the scheme away from just the main well-known high street banks into the lesser known but equally valid alternative finance provider space. And of course, because we're talking about an interaction with the public and taxpayers' money fundamentally underpinning this, then they absolutely have to do their due diligence properly, and that does take time. But we're very aware of the fact that they are trying to expand the supply side as fast as is reasonably possible.
We've heard some bits and pieces in the press, and I think this has been put out there by some alternative funders, so the likes of Funding Circle and iWalker, who are moving, either are accredited or moving towards accreditation under the scheme. And they're talking about sort of how they can process 15 or 20,000 applications a week on through the scheme. Given that the big banks have managed to get away about 16,000 loans under the scheme, doesn't this point to a dramatic failure in some way on the part of the banks? If some really tiny businesses in reality, like some of the alternative funders, can distribute these loans on a industrial scale, what does that tell us about the way that the banks are operating?
I think we have to be a little bit careful here. The initial rules around the scheme were, from the bank's perspective, possibly a little bit confusing, because ultimately they were told that the scheme applies under their normal commercial terms, and therefore one would immediately assume from that applicant businesses would have to go through the normal commercial procedures. They would be assessed for viability. There would be a check on what other available security there was, because the reality is that they were told pretty much under no uncertain terms, that this scheme was essentially a lender of last resort, and therefore a thorough check on what other security was available and whether the business was viable and whether or not they'd taken advantage of things like VAT deferral, or all that kind of stuff had to be thrown into the package. Now, the mood music around that seems to have changed quite a lot, but I think banks are ever sensitive to adverse publicity and criticism, and I think they were reluctant to simply open the spigot and allow taxpayers' money by virtue of the guarantee. Let's remember, it's not taxpayers' money per se, but they were very cautious about entering into what might subsequently seem to be extremely unwise and unwary lending. The second point around this is that the two businesses that you mentioned, Funding Circle and iWalker, are both heavily technology driven in a way that most of the banks simply aren't at the moment, although they're all working to catch up. The reality is that they are having to re-engineer their aircraft in flight, whereas organizations such as iWalker are a ground up build focused on technology, which means that they can do two things. They can very quickly and tightly analyze exactly the type of business that they are willing to or wish to interact with, and their filters therefore are very, very good indeed. They don't really require humans to do that. Those that effectively get filtered and pass through their mesh can therefore be turned around, and we know this as a matter of fact, in hours or days, not weeks and weeks. And those that are excluded, it's very binary. They get a very, very fast no. You're either in or you're out, essentially, which means that the processing of these applicants happens really, really fast.
I mean, the way you look at this, do you think that the solution, I mean, I'm aware you said there isn't one solution to this, but is one of the solutions for the British Business Bank to continue to engage with alternative funders? Is that part of the solution?
Yes, very much so. I mean, when you look across the entirety of business lending in the UK, alternative funders are a significant but not dominant part of that. And I don't know the latest figures, but if we parked it around about 15%, that would feel about right. So clearly the major banks are still the dominant players, but by virtue of who they are and what they are culturally, reacting at speed, and especially when we're talking about very large numbers of fairly small transactions, that's really where the problem is. This problem doesn't really sit with the sorts of businesses that want 1 or 2 million pounds. I mean, clearly they have their own problems, but they also tend to have resources available to them. Businesses that want £25,000 and need it by the day after tomorrow, really this scheme is failing them at the moment. And that I think is a role that alternative finance providers are ideally suited to address, because they're all geared up to do large numbers of small deals.
Now, the bank referral scheme, where finance aggregator platforms were designated by the Treasury to receive bank declines, is still in place and is working away. And anecdotal evidence is that more bank declines are coming through that process. But the numbers coming through there are certainly far short of the expected numbers, given the amount of businesses that, as you said earlier on, may not be going through the formal application process, but are clearly being steered away from the process at some point. What role do you think the bank referral scheme has in this crisis?
I think the platforms that are designated under the bank referral scheme could provide a pivotal function for this very large number of smaller businesses. We have to be a little bit careful here, because in the end, the designated platforms, their core role to provide safe passage, if you like, for those businesses seeking finance to be assessed and then introduced to reputable lenders who are suitable for their requirements. Nothing changes there at all. That is an absolutely excellent way of small businesses going about seeking finance. However, the designated platforms themselves are also experiencing supply side issues, because ultimately their lenders seek their finance usually from wholesale markets, and certainly are just as nervous about the current state of the economy as the more traditional lenders. And therefore the designated platforms, in conjunction with the Treasury and BBB, need to sort out the supply side part of the equation. Now, we've touched on this just now. I mean, broadening the number of businesses, lenders rather, under the CBILS scheme is one thing, but we have to bear in mind that CBILS should not be seen as the only game in town. And there are lenders there who will lend on normal commercial terms to businesses seeking funding. And I think business owners have possibly been a little bit blinded to the alternatives that are out there, because CBILS is currently such a hot topic.
Okay, I mean,
I'd just like to sort of expand on that thought a little bit. Your earlier point, yes, that there is a significant difference between the numbers of businesses that we believe are being declined, but not in a formal sense. They're being discouraged from applying, and those numbers that we see coming through the bank referral scheme. Yes, the numbers are up, but nothing like the numbers that are actually involved in this this issue. It is possible, this is not a criticism, but it is possible that one of the reasons for that is that banks have essentially had to reposition lots and lots of staff who possibly weren't customer facing beforehand to deal with this deluge of both online and telephone applications under CBILS. And those staff may not have yet received training about the laws pertaining to the bank referral scheme. So they may not even know that they're entitled to be referred, and in fact that the law compels them to offer that referral to the bank to the referral scheme. And that is something that needs addressing, although I would be the first to admit it's probably not top of everybody's priority list.
Okay. Good stuff. What about any rays of sunshine out there, or rays of light, if not sunshine? Where do we think I was reading something this morning, in fact, about people are already trying to post-mortem this and sort of predicting another rise in alternative finance, very much as there was, as you remember, after the financial crisis in 2007-8. What are the rays of sunshine out there at the moment that you think are available to business owners?
When you say available rays of sunshine, I mean, clearly the onus remains on business owners to explore all of their options, and I think one of the problems with schemes like CBILS is that mentality that the government will sort it all out. Well, of course, they simply can't. There remain a number of lenders and products out there that are open for business, and our own absolutely excellent pension-led funding product, for instance, for those business owners that are in a position where they have a pension pot, remains a first-class solution to many of these funding requirements, but unfortunately also remains poorly understood and not very well publicized. There are a number of other products out there that do the job that is required. Ultimately, though, we have to be a little bit careful around all of this, because our sort of starting litmus test has always been we don't transact deals where we're putting money into businesses that aren't viable.
Yep.
So I think it's really important that business owners, instead of simply panicking and looking for cash, have to take a long, hard look at what their current position is, and whether putting more money into it now is the right thing to do, because almost all of these facilities, government backed or otherwise, are loans and will need paying back.
Yep.
So I think we have to start with the common sense test. I'd also just throw into this one a real caveat emptor here. One thing I have noticed, and a quick Google search will illustrate the point nicely, but there are a lot of intermediary style businesses out there offering to package your CBILS loan for you, and many of them are charging upfront fees. You have to be really careful about that. Paying a fee to an intermediary for a very uncertain outcome may not be a very sensible thing to do. And I think it would be sensible, if you're going to use an organization to help you package your CBILS application, to make sure that that fee is fully contingent and payable only on success rather than in advance. That would be some strong advice from me, because I know there are some scams going on.
Okay. Well, look, I think that's really good. Thanks for your time this morning. I'm sure over the coming days and weeks, we're going to revisit this many, many times. The health of the UK economy is at risk at the moment, and I think this is on all of our minds. So thanks a lot for your insight, and we will catch up soon.
You're welcome. Thank you.